Sarah Christie, the CEO of Banyan Gold. We've had many conversations in the past, and it's a pleasure to have you here this morning, Tara.
Great to talk with you again, Robert.
I want to get into some of the nitty-gritty questions, some of the tough questions. It's obviously a tough market environment, so shareholders have tough questions. But I want to start out with a little bit of an intro, sort of set the context. And I was thinking about this last night that, if we go back to Banyan in, let's say, 3.5 years ago, early 2020, so right around the time of the start of the pandemic, you didn't have a resource. You didn't even have 1 million ounces. You didn't even know that you'd have 1 million ounces. Obviously, the share price at one point was like 4 cents, and $4 or $5 million market cap. And so sometimes in this hyper speed world, we lose track of the context and how far we've come at times, right? So Banyan has actually had a tremendous 2020, 2021, 2022, all years with share price gains and some quite large share price gains. And now here we are in 2023, and share price is down. Actually, from the peak, it's almost cut in half at this point, and it feels like all those 3 great years, those 3 years in a row where the resource was built, 6.2 million ounces. You got coverage from way more brokers and way more investors. The company came into its own, in the last 3.5 years. And now we're dealing with a little bit of a hangover. So I want to ask you what your thoughts are on that, like this journey. And maybe this year it's just sort of, it's the way it had to be. It's that ebb and flow of the sector.
That's good perspective, how far we've come and how much value we've generated for our long-term shareholders and shareholders is a really good point. Need to look at the context of the market here right now. And I kind of disagree with our peak was 57, but that wasn't a sustained price for any time. Really kind of 45 cents was the price that was kind of a sustained higher price. So, we're off our peak, but compared to our peers, and the majority of our peers, we're actually holding in a lot better, and we did for a longer time until this most recent time period. And people ask me, well, who's selling right now? The retail market. People are really struggling with their mortgages. Everyone was really hoping September would be better, and people have to pay off, margin calls and other issues. We're not seeing huge volumes, which is, our institutional shareholders understand the long-term value. And that's really been a big change in our share registry over the last few years too, is moving from, the speculators to the longer term institutional shareholders that understand value. And it's really why Banyan's taken a step back and stopped and thought, okay, what are we doing now in this market? And every CEO of every mining and exploration company should be taking a pause, because the strategy that we launched with in May and June in this market might not be the right one. So that's partly why we've taken a little bit of time now after our phase 1 program to take a break and think about how are we going to add value in the context of this market and preserve shareholder value, which is very important. So I'm very much thinking about how do we get back on the adding shareholder value track in the context of this bigger market that we can't control. The sector, the retail market, simply is not excited about gold projects, even ones with major discoveries now, which we're seeing large share price gains. That's not happening right now. So, and that's a key challenge. But we have a real asset with 6.2 million ounces on the surface with existing infrastructure beside 2 mines, both of which are cash flowing. I think that sets us apart, and I have to keep that in context. There are very few resources the scale of what we have that are in a permittable jurisdiction.
Fair, yeah. So the market tells a junior mining company how fast that it should go. This is something that's been established. I've heard a lot of people say it. It makes a lot of sense. I mean, at the end of the day, you plan for the worst, but you're at the whim of the market and the ability to raise capital. Maybe you can shut down for 6 months or a year, but always at the end of the day, a junior mining company has to raise capital. So if the market is telling you, we don't really want to give you a lot of capital right now, or we are only going to, on our terms, and those terms are going to be very bad for the company and existing shareholders, then you go slower. So that's what I hear you said there, and obviously
we do different things. I'm not necessarily slower. I think what we're doing now is actually adding more value. You have to remember, we don't have that big long winter down period once we've got all our results. We only got our results and then put out our resource, and we're now have this year's drill program results coming in, but we have a huge amount of value that we can add without having to drill anymore this season if we choose not to. We can drill 11 months of the year, so we have optionality unlike other companies. So I'm in no rush to spend the money that we have. We've got $9 million, plus $9 million in the bank today. That goes a long way. We can add a lot of value with the technical work that we're doing now, looking at that resource, understanding the higher grade. Other companies have that whole big winter off period to do all their technical work and analysis. And, we did have some delays this year, forest fires, that was quite around us, quite a bit of anxiety, it took a lot of time away from work. And now I'd say we are able to actually dig into our data and understand what's going on and figure out, what is this project? How are we going to actually add value, and what things can we do without necessarily drilling? Because when we drill, we add 10, 20,000 ounces per drill hole at times, maybe more on good drill holes. So, but the market right now, I don't think is going to care about that. So why would we spend our money on things that we don't think the market's going to care about, opposed to the things that they are? We know metallurgy is really important, and we've invested a lot of time and effort into that, and we want to get it right. We think we're on a great track for that. So that's something that, we're going to spend money and time on. And time is actually really valuable. You don't just turn it over to your consultants and say, here, go away and come back with some results. Being actively engaged in that and looking at options is pretty important. And will add lots of value for us.
Yeah, so I want to get back to the prep work that you're doing for the PEA a bit later in the conversation. But, let's get to a few questions from shareholders. One shareholder said, the resource is now 6.2 million ounces, inferred, it's growing. He's heard you say 7 to 8 is quite possible or probable. But the share price continues to move lower. And the sector's terrible. There's no doubt about that. We're seeing companies that put out fantastic news, be sold off. But is there something else wrong? Is there something else that you've heard from large investors or maybe, analysts, that there's something that they don't like that you've done, or maybe it's too low grade, or what's wrong that the share price is selling off? He's trying to, comprehend that this market is so irrational, or there's something that he's not seeing.
Well, I think he just needs to look across the sector. Compared to other companies, we've sold off a lot less. So, and very, very low volumes, which is very different than many of our peers that have large volumes, large drops, dropped a lot sooner. So no, is there something wrong with this project that I know about now? Absolutely not. I think people like to blame CEOs for the context of the market. That's not necessary. It doesn't really matter whether it's fair or not. The reality is this is a great project. It's in a great location, and my job is to actually protect shareholder value as best as I can. In the context of a market where people are not really excited about gold, and add value to the project. I think we're doing that. We haven't found any fatal flaws yet. I think just seeing the extent of where we drilled, people can see that it's open, there's room for it to grow. but finding an economic project. And I heard, the too low grade. Well, that's one of the things that we're now doing is modeling where the higher grade is. And if you looked at the sensitivity charts, and I know people ask questions about why did you pick this cutoff grade or that cutoff grade. This is an inferred resource. It's not a mining pit yet. People need to keep that in context. You pick a cutoff grade which is reasonable for the type of project that you think it might be. We were comparing it to Victoria Gold's heap leach, where their cutoff grade is actually lower than the cutoff grades that we selected, and our grade is very similar to theirs. If we'd have picked 0.5, and you look across the three deposits, there's 4.5 million ounces at 0.5. Is that all mineable? Well, at an inferred stage, you don't know that yet. But that's really interesting. That's almost a gram. So, can you find a starter pit or a higher grade mine or mining scenario to start with within the 6.2 million ounces? Yeah, you can always pick different cutoff grades. We picked a lower cutoff grade to show that the global resource has a lot more potential. And then when people can see that it's open, east and west, down dip, between airstrip and power line, people can kind of get the sense of the potential scale of it and that there's room for growth. But the actual mining project, you don't get from an inferred resource. And, we are doing some internal modeling, understanding that higher grade. With those holes that we just released a couple days ago, probably people don't understand the context of why that's exciting, that we found this higher grade zone to the south that is a bit deeper. There's a higher grade zone which we found to the north, which I talked about as well, which is closer to surface. Both of those are really important because they might be part of what your original mining scenario is, as you understand how that higher grade occurs and what it's going to take eventually to move it to indicated with the drilling that we did in South Power Line there. It did reduce the spacing to about 50 meters, which will give our QP more confidence in understanding the continuity. And from what we're seeing, we think it's actually looking pretty positive. We drilled in that northern corridor where we see that higher grade 2 years ago. We drilled that star at 25 meter spacings, which gave us a lot of confidence in the continuity of that area to the north and the mineralization there. So, what we're doing is not only the results that you see, hole by hole, it's how does this additive add to the confidence in the project and add value for the next phases as we move forward.
Yeah, I did notice in the news you put out on Wednesday morning a set of results, including holes 458 and 461 kind of stood out to me. And just taking a look at the plan map, which, by the way, is getting very crowded, a lot of drill holes. 458 and 461 aren't that far from each other. It's actually pretty close together, sort of in the center of the power line, deposit. And I'm wondering, is that where the higher grade zone is starting to take shape? Because, hole 458 had 34.2 meters of 0.95 and 16.1 meters of 1.66, and those are two separate intervals, less than 100 meters depth. I mean, that's, for this project, that's a great drill hole. That's fantastic. So is that where it's starting to take shape, or is there something else that you're seeing?
Well, we're seeing it two east-west trends, one to the north, one to the south. So yes, that helps that's part of it. And you need to look at it overall because this is a big bulk tonnage mining scenario. But we absolutely, that's why we drilled those holes. We really wanted to understand where that higher grade was, where it's occurring. Yeah, we still have some more holes in there that would probably continue to define that higher grade zone. But are we going to drill those right now? I'm not in any great rush to burn cash, because drilling, you burn cash pretty fast. I think we can add a lot of value by taking a bit of time to analyze what we're seeing, looking at some of the structural and other controls which we're seeing. But remember, when we get the results, we release them to the public, but then we spend a bunch of time thinking about them and analyzing them in the context of the other work that we're doing. And we're doing a little bit of engineering look at this, to see, where a mining project would be, which gives you a better understanding of the deposit and where you might focus. So I think that is all going to add value. These holes are, you're right, those are pretty good drill holes for this deposit.
So another question from a shareholder: have you found the location of the intrusion at the project, and is the intrusion does that host higher grades?
Well, there's no guarantee that an intrusion would host higher grades. Some intrusions in this district are higher grades, some are less. Do we have vectors and heat directions from what we're seeing in the minerals which are within the deposit? Absolutely. We're starting to really understand that, and that's some of the work we're doing now, and we have a few different experts that are helping us with that. We do think it's probably a buried intrusive, which is no surprise to anybody, but where you drill to get that and how deep you have to drill, we don't know yet, and you don't want to just take a risk and drill a hole. You could miss it by 20 or 25 meters, or an area where it might be coming to the surface. So we're taking some time to analyze the data, think about it, understand what's going on, get some advice from some different people looking at our data set, and helping us with that. Obviously there is an intrusion. We can see those dikes at airstrip. We know that, you can see them crossing, so they came from an intrusion somewhere. These sheeted veins have the geochemical signature of mineralization from an intrusion. So there is one. We are, deep holes are expensive, so you want to make sure you target them well. And if you drill a couple drill holes and you miss it by 25 meters, 50 meters, the market then will get very disappointed versus really spending some time thinking about it before you take those, expensive holes that are a risk. And I've seen lots of projects where people have drilled holes and missed the deposit by 50 meters, and then somebody comes along later and drills a little deeper and makes a discovery. So, we've got lots of indications from our drill holes in our database on heat flow, so that is certainly giving us a vector.
Okay. That's very interesting. I want to ask you more about that vector, but let's go on to the next question. So I'm just taking a look at the plan map, and it looks like you got like 8 or 9 holes still pending assays. It could be more. I'm just not, seeing them on the map. And it looks like about 5 or 6 holes out to the northwest. Like these are definitely step outs, into new territory. I know you can't tell me, what the assays are. You don't have them yet, but is that area more interesting now? Are you seeing
up to the northwest there on the northern part of Powerline?
Yes.
We knew the mineralization continued there and that we could add some ounces pretty quickly and understand what's going on. Eventually Powerline likely abuts up to where airstrip dips beneath it. Do we actually spend some time and see what kind of grades are in between there and drill some additional holes? It might be lower grade. So those ones were holes that we specifically thought would add value. There's actually 69 holes, because with the holes to the east, we drilled 107 holes this year. The first press release had 25 holes, which is closing the gap between Oryx Hill and Powerline, which was important. And then this second one had 13 holes. So we've going to have lots of news flow. Where our processing of core and cutting core did get delayed when the forest fires came and they closed the highway to new people coming in. So we were only just wrapping up our final cutting core and logging and cutting core this week, actually. So those will get into the lab, and then we'll get those results back, and we'll have pretty steady news flow from our results through the fall. So we don't have the benefit yet of having all of our results, obviously, because we haven't put them all out yet. But it is they are coming. We're excited about what we've added in terms of value this year, and then the technical work that we're doing right now.
Okay. And let's, switch gears here. So one of the things you always talk about is, the infrastructure advantage that you have. And you make sure to point that out, that you're near an operating mine, largest gold mine, in the Yukon. There's a power line that runs through the project. There's road access. Tell us about all the advantages and why, it's so important.
Well, the first part of that really starts in permitting. In the Yukon, there has been challenges with permitting roads into brand new, pristine areas. So having existing roads is really valuable. The second is that your capital cost is so much reduced. We have a main highway, a power line right to the hydroelectric dam that's only 50 kilometers away. So connecting to green power is really important to lots of shareholders, as well as institutions and investors and corporates that might be looking at this. Cell phone service, even going to have fiber optic cable even through the property out to Victoria Gold, and there'll be more fiber optic installed up the highway in the coming years here. That's fabulous infrastructure. When you're looking at projects and capital costs, when people have to build 100 kilometers of new road, there's a lot of work and money that goes into planning, permitting, and then building that and maintaining it. So there's an awful lot of value in having existing infrastructure, from long-term operating costs to the capital construction costs. And I also remind you that we have 2 mines next to us.
I know. I was literally about to just say that. There's Keno Hill. Yes, the 2 mines. In fact, what are they doing up there? Can you give us, like an update, or are they back in full operation?
Oh yeah, Victoria is back and in full swing, and right before the fires, they had really got their production up to fixed a lot of the problems and got their stacking, and I don't have exact details, but from what I hear, it looks like things are humming along and they're back and stacking. So and things seem pretty normal. Hecla seems very, very busy. They have lots of people. We see lots of traffic. They're obviously investing lots of money, which was what we all knew that project needed. I don't know what they're doing with their gold assets, which they purchased earlier this year, but they've shown they're interested in gold and made an investment in this jurisdiction. So I think that's kind of exciting. And in this business, timing is so important. Having a project that has the right attributes, the right time, can be permitted in the right time. So there's a balance between all the things that you need to do to position a project for the right market. And the market's not quite right now with how gold's a great price. It's $1,900, $2,600 Canadian. Is actually a very good gold price. It's the market's not there, and I think a lot of that is because of interest rates. Investors are a little skeptical of what's going on and why gold projects are so undervalued despite the gold project price. And there's a bunch of factors, I think, that are fitting into it. So a CEO's job is to get the project as close to being and as ready for when the market changes as they possibly can. And I think we're making some great strides towards that.
Okay, I'm going to throw you another tough question, Tara. This is from a shareholder. He notes that there's a lot of options outstanding. Almost 10% of the trading float is in options. And he says it seems very high. And what are your comments on that?
Well, I guess there's a couple things. A lot of investors don't get in early, and companies give themselves half-cent stock at the beginning. And yeah, they have a tight share structure, but the founders already have a huge share position that they got at 0.5 cents. And so the retail investor is already, behind, because they've already made a whole bunch of money even on the IPO, and they've protected themselves. Banyan's not like that. Our IPO was 15 cents. There was no half-cent stock. I'm the 3rd CEO. I had to buy my whole position in the market. And then if you look at those options, a huge percentage of them, almost 4 million shares, are at 45 cents. So that's actually in the retail investors' benefit, because if people want to see any value from them, got to get our share price significantly above 45 cents. And how do you motivate people? Banyan's is a junior exploration company. We need to make sure that our staff and our key people are motivated to care about the share price. So how do we do that? You issue options. We don't pay the highest salaries. We can't. We're not a big operating mining company. We need to protect the treasury from times like this. So yeah, that is people's incentive to actually make sure that what they're doing is contributing to increasing the share price. So I take kind of exception to that. I think you need to get a lot of options out, because that's motivating all of your staff to be aligned with your retail shareholders and your institutional shareholders.
Fair enough.
Unless you've done the half-cent stock stuff at the beginning, you're already pretty motivated.
Fair enough. Yeah, that's a good answer. Okay, so the next question from a different shareholder is, well, I saw you speak, in the Yukon. You said you wanted to get the share price up. How do you do it? So I'm gonna add a little bit to that question. So what do you think the market wants to see from Banyan here in the next 6 to 12 months? And is that going? I mean, obviously you don't know what the gold price is going to do and the cycle in the sector is going to do, but what are you hearing from other shareholders that they want to see?
Well, I think everybody knows they're waiting for us to come up with a metallurgy and shows that there's an economic project here that can be built. And that is something we're very focused on. Also understanding that higher grade and where the starter pits are or the project is and some of the engineering around that, which isn't expensive, but is really important work. I think we're positioning Banyan very well. And remember, I'm a big shareholder. I'm a 4% shareholder, which I bought in the market. And some of it on credit because, every time I've exercised my options, I've never sold. So that means that I am very motivated and care about the share price. And yeah, I don't like where the share price is right now, but am I confident that we're adding value and spending shareholders' dollars well? Absolutely. That's something that we think about very strategically. We don't have a huge overhead. We're very conscious about is what we're doing now going to add value in the context of this market. And, with a strong treasury and optionality of when we can drill and what we can do, there's an awful lot of work that's not drilling that I think will add value. And maybe we even need to get out before we go back drilling again because, if everyone's waiting for metallurgy, well, let's get that right. And we're not going to, I don't believe in putting that out piecemeal results. People already kind of have the overall sense of these deposits are pretty similar in the Yukon, but we need to actually do the detailed work, look at the options, and that was, bringing on Brad Thrall was actually really good because, I was coming in with a bit of a preconceived idea of what this project should be. He's like, no, the economics and the results need to drive that, and you need to look at a whole bunch of stuff, even if you think that this is what it should be. There are companies that are going to look at it differently or want to build it differently, and you need to actually run the numbers, understand what the test work means, and make sure it's representative, and then come up with a flow chart or flow charts, and then you know what the best options are. So that's been a great process, and it's well underway. We've got lots of work. We're continually sending more samples and understanding the project, where this higher grade is, where the starter pits also will help us refine some of that metallurgical work as we move forward. It's a larger process than just sending all the juniors send 10 samples off, do the original bottle rolls. Yep, it's amenable to cyanide. Great. We've seen that on lots of these projects. But then there's the really digging in and doing real pre-PEA level of metallurgy that you need.
All right, so I do want to open up the floor to anybody who has a question for Tara, but while you're raising your hand and thinking about the question, let me ask her another question. So everybody knows the Lassonde curve and the mining life cycle, and you're in the exploration stage, but you put out a resource and it's a big one. How do you, and you're advancing to a PEA, and you're just talking about the work that you're doing for that PEA, how do you avoid losing the market's attention during this advancing to PEA and avoiding that really tough stage in the life cycle of a gold mining project?
Well, that's partly why we're doing some of the regional exploration work that we're doing, that's showing that we have a broader exploration potential. We've never had time to work on our nitro property, so we've got extensive soils and rock sampling going on out there now. We've got a huge land package. Ormac itself is 173 square kilometers, and we really only just went out and soil sampled South Ormac these last few months. So there is a lot of exploration potential on the property. I think that's partly will help people to see that, this could actually be much larger. But the other thing is making sure there's that competitive tension. Do I think that we're going to be taking this all the way through permitting? My gut tells me that there's going to be some competitive tension. This is a very significant project. Once we can demonstrate that it works from a metallurgy and an economic perspective, I think it will be, just its location, the ease with which it could permit. That's the other huge advantage we have, is we already have all the baseline data from HECLA and Electrical. A lot of companies, they get their PA and then they start their baseline environmental and they need to spend 3 years at it. We don't need to do that because we already have a huge amount of data. We started our baseline 3 years ago. So it puts us in a bit of a different position. And, we're not in an area that has huge wildlife concerns. We've got these existing roads. So, those are the things that are the most challenging in permitting. Of course, the key thing is to make sure that you've got a relationship with the First Nation. And we're very fortunate to have the Notchonaiktun First Nation, which is a settled First Nation and has agreements with the 2 mines right next to us, so they understand mining. Those are all really key factors that make this a very desirable project. So, I think with the current market, it's hard to make any gold project exciting unless you make a brand new discovery with some ridiculous high grade. I think it'll be tough for a little while, but once, and that's the challenge, is the retail market is checking out, but the cash flowing companies that are looking to put ounces on their books are not checking out. They are like, this is opportune time. All of these really exciting assets are dirt cheap. I think they're going to start looking around fairly hard because, their resources on their books reserves have been depleting pretty significantly over the last few years. When's the best time? When the retail market and others are all not interested in gold. It's the time when they should be buying, especially when many of them are cash flowing. There's gold companies in Australia and other places that have lots of cash, are looking to deploy it in places like Canada that are safe jurisdictions.
It doesn't look like we have any questions, but I'm going to throw you another one. And maybe this is a tough one to answer. Which company? So there's Snowline, has had an amazing couple of years. Fireweed, obviously, is doing very well. Some big investors have come in there. It's good for the territory to see those kind of investors put up tens of millions of dollars into Fireweed and Snowline. But which company or which project will be the next gold mine in the Yukon?
Well, that depends who you ask. But you've got things like coffee, which are coming out of the permitting process. But Newmont needs to commit the capital to that. So it depends on whether you think it'll be something that's kind of starting out from now, or whether it's one of the projects that have been sitting around and waiting. Does ours have a chance of being the next gold mine? Absolutely. Yeah. If we continue along the trajectory that we're going, it really will depend on who's going to say, yep, we're going to move this project forward and commit the capital to it. So it's kind of a hard question to answer, Robert, without knowing who all the players are that are investing that capital and what the people that have existing projects are going to do.
Mm. Yeah, I know. It's a very hard question. That's why I asked it. And it's not just hard, it's impossible to answer, right? You don't know the future. But I was hoping to get you to say Banyan's going to have the next one. But obviously that's a very aggressive forward-looking statement.
I'm doing everything I can to position it. You'll see us add to our team, start to really get that, understand what it is we need to do to actually make this project permittable as fast as possible. And the other technical aspects of it. I'm really excited about it, and having a little bit of a break here between when we drill next. And I know everyone's waiting, when are you going to announce your phase 2? Well, we're thinking about it pretty carefully. What is the best way to have value for our shareholders? I'm not in a rush. The money's not burning a hole in our pocket. It's actually making interest.
Oh,
so
making interest?
Yeah.
Oh, I'm joking. Yeah, that's very unusual for a junior mining company to, making a yield on its cash in the bank. But here we are at 5% interest rates again. So that's a prudent thing to do if you don't need to spend it soon. Thanks a lot, Tara. I mean, I think I want to give you the last word. I think this is a great conversation. I got to all the key questions that I wanted to ask and shareholders gave me to ask. Can you just give us an idea of what we can expect from Banyan, let's say between now and the end of the year?
Great, and I do see some shareholders online, so if some of them want more details, I can see a couple who are quite technical. I look forward to hopefully meeting them. You'll see us at quite a few events. We have been very strategic and not spending a huge amount of marketing dollar, but we do need to get back out and talk to particularly our institutional shareholders. So do look for us at the events. You'll see in our news release there. The next 6 months and into the first quarter of 2024, you'll see us put out more drill results showing a rationale for why we're drilling them. And it's not just to get drill holes, it's to show scale. We do need to find the edges of this. We need to figure out where the infrastructure is going to go. The technical work that we're doing is adding a lot of value. Understanding the higher grade, understanding different mining scenarios, doing the metallurgy towards flow sheet, all of that, the baseline environmental work, compiling what we have, seeing what we're missing, all of that's hugely additive to this project, but it's not really expensive. We're going to, so you'll see lots of news flow into the next year. Meanwhile, we've got a really strong treasury. If we see the market actually turn, we can respond. We'll be able to do a very aggressive drill program when the market will actually appreciate it. When you're in this kind of a market where people don't care if your drill hole just added 20,000 ounces of gold, why would you keep drilling? So we have optionality, whether we drill this fall or save it to 2024. My goal as a big shareholder is to make sure we're adding value, preserving value, and we're ready for when the market is going to appreciate us. And I think once we get our metallurgy out, and I know lots of people ask questions about that it will be an important catalyst for us to move forward. So we're trying to do our best to make sure that our shareholders benefit from what we're doing.
Thank you, Tara. And what's the best way a shareholder can contact you?
Is sending an email to either me or our info at Banyan Gold. I'm going to be a little bit on the road, so we're happy to get back to you and answer questions, or come and meet us at one of the shows if you want to talk in person. That's one of the best. And we'll probably have a couple other events. We've got that breakfast in Vancouver coming up with Michael Gray. And that's the other thing, is people should take a look at some of the analysts that are covering the Yukon, covering us. Richard Gray put out a piece this morning from Cormark. They've been covering us for a long time and see the value paradigm. Their research is also worth reading. So I encourage shareholders to reach out to them as well to get an opinion from others about that, especially those that are worried about what are the fatal flaws of a project. Talk to some of the people that look at a lot of other projects.
Very good.
Thanks for tuning in. I hope that you received some value from this video. Please stay tuned to goldfinger.capital for updates and new videos. Have a powerful day.